In North Carolina, a low home appraisal could cause a buyer to lose their deposit and possibly even more. When someone uses a loan to help them buy a home, the lender will typically send an appraiser out to estimate the value of the home. The lender will not loan more than the amount of the appraisal. If the appraisal amount is less than what the buyer has offered for the home, it could cause potential problems. So let's see, for example, if the buyer has offered $300,000 for a home, the seller has accepted, and the appraisal amount is only $280,000, then the buyer will have to pay an additional $20,000 in cash in addition to the deposit and closing costs, etc., that they were already going to have to pay. If they don't have the additional cash, they will not be able to complete the transaction, which would result in them losing the due diligence fee. And depending on the timing, if it's after the due diligence period, they could lose their earnest money. They could lose any inspection or bank fees that they've already incurred. So it could be pricey. Now, to complicate things further, appraisals are subjective. 3 different appraisers could go out to a home and they could give 3 different appraised amounts. So, before you make an offer for a home, make sure that your realtor performs what is called a comparative market analysis of recently sold comparable homes so that you have an idea of what your home might appraise for. Have them show it to you and review it with you. Now, a realtor is not going to be able to guarantee that your home will appraise for what you offer, but they could give you a better feel for the risk involved. Let me give you 3 different examples of comparable analysis scenarios. So, okay, 1, they could do an analysis and there could be several nearby comparable homes that support the price of the home, in which case you have a relatively low appraisal risk, not absolute, but it's lower. 2, the second scenario, you could have an instance where they can find 3 or 4 comparable homes, but there are also maybe 3 or 4 or more homes that do not support the price, that are lower. Now, you may feel, and the realtor may feel, that those 3 that support the price of the homes are truly the most comparable, but there's no guarantee that the appraiser is going to select those homes. They could always select some others and end up with an appraised amount that is lower than yours, or what you're estimating it to be. And then 3, there could only be maybe 1 or 2 homes that support the price, possibly even none. So obviously in this situation, the appraisal risk is going to be higher. I've been in that situation before. I've warned my clients that the appraisal risk is high. They were okay with it. And luckily it worked out, but I was really, really nervous. So here's the thing. The key is to match your financial situation and your appetite for bidding above the potential appraised value with the situation that you're in, with the situation of the market analysis that you might be doing for a home. So if you don't have the flexibility in the amount of cash that you could put down, then it might be a good idea to steer clear of making an offer for homes that aren't supported by several comparable amounts. I have a background in finance, so I usually go do this in a great deal of detail. I've got my own Excel financial model that I created myself. If you're looking to buy a home, I'd love to help you. If you're looking to sell a home, this same sort of analysis will help you set the price to sell your home, when price is really the most important thing. So I'd love to help you as well. I primarily serve the areas around Winston-Salem, going all the way west to the areas around Elkin. I'd love to hear from you. Thanks.